Are homes in Austin 50% off? Well, that's what CNBC called me about to do an interview this week. And unfortunately, with all of the Trump tariffs and all the news there, they postponed our segment. So I thought, why not I actually do what they asked me to talk about? So they asked me to come on a comment about this Newsweek article. And the title is Austin home prices drop 50% as Texas housing market cools. And stay tuned halfway through this video. I'm actually going to go through the Austin numbers as far as what's happening in the market right now. So we'll show you that in just a moment. Now, there's a lot of interesting things. I've been on Newsweek several times. I've quoted this YouTube channel several times on Newsweek. And look, let me be honest with you. When I write these titles for these videos, they have to be clickbaity. So I completely understand why Newsweek would write such a clickbaity title. The challenge is when you write such a clickbaity title, it gives a perception that it feeds into some of these crash bros and the people that just want the market to crash and isn't reality. Because when I have buyers and sellers reach out to me, they're like, okay, the market's crashing and the market's amazing. And I feel like we need to find the balance where, yes, I'm going to write clickbaity titles myself. So you get in to watch the video and then I give you a lot of good information. So I just wish that Newsweek did the same because some of the information in here is good, but I think a lot of people just don't get past the headlines. So here we go. So they're talking about this property and we'll show it to you. So this property right here, 4408 Longchamp. Now I was going to reach out. This is actually listed by an agent. It's their personal property. I was going to reach out and talk to them a little bit more, but I decided not to. So we pulled it up off of my website here. So this is a gated private community next to where the golf course is, a private golf course where they do like the big golf championships every year. And here in Austin, it has a boat access and things like that for the lake. When this specific home sold, now we're a non-disclosure state, so I can't tell you exactly what it sold for, but when they bought it back in 2018, they bought it for well under $2 million. Okay. They had it listed at $4.9 million. And I don't know the reason why they listed it like that. It could have been that they were just trying to get an offer. This is the problem I run into with a lot of sellers, especially in the luxury market, is that they want to way overprice their homes to give room for negotiations. And so what happened with this property is they slashed the price in half, I think to $2.1 million, which even if they had sold it at that price, there's still a lot of meat on the bone for that home, for that owner that bought that home. Again, I can't tell you what they paid for it. So what's interesting is that they took that and then wrote this article that home prices are slashing 50% off. As you can see from this MLS, they've actually raised the price back up to about $3.995 to $4 million. The biggest thing I think we're seeing is in the luxury market is that there's been a softening in the luxury market. And so prices have come down. In fact, that's what they talk about in this article. So I think they do a good job overall in their article, but let's talk about this. Okay, so now let's break in real quick and go into the market numbers in the Austin area. Now, real quick, I like to tell you about that when we look at these numbers, people look at the MSA and they use the MSA numbers as Austin. Now, the city of Austin is completely different from the MSA because there's a total of 5 counties that make up the MSA. So if you have a market far out like Williamson County, Georgetown has a ton of extra inventory right now. Liberty Hill has a lot of extra inventory, and you have a builder that's putting homes out on the market and they're price reducing, trying to get that picked up. That will actually drop the prices in those areas. And again, when there's not as many sales in a specific area, that will allow the numbers to spike and to drop very rapidly. So if you have a bunch of homes that sell at a high price point 1 month, then that's going to skew the numbers. So let's look at this real quick. The numbers in Austin are down 4 points. So this is the MSA, is down 4.7% year over year. Closed sales did go up slightly. So what does this tell us? Closed sales went up 1.1%, but the prices came down, which means the end of the year, a lot of builders were doing price cuts in order to get sales, to get closed sales at the end of the year. And those people that had their homes on the market were probably dropping their price trying to get some of these closed sales. Now, remember, in November, we had interest rates drop. And so when we had interest rates drop, people flooded in the market. So the December numbers were high, but the January numbers are low, which means that people went under contract in December got a really good deal. And that's what you're seeing here. Pending sales were down 7% in January, though. what happened in January? Rates went back up. So every time we see rates go up or down, we are seeing a fluctuation in how many people buy in the market. Right now, if we look at interest rates are hovering still right around 7.03%. And that's of today, February 19th. So these rates are being sticky. They're not going too high up and they're not going too far down. Side note, we actually are getting clients good rates on a lot of these deals because we have the builders kicking in, lower rates. They're offering buy downs. So, a lot of the things that we're putting under contract are not in the 7%. If you are curious about how that works, definitely reach out to us at the Night Group. We are helping quite a few people, especially right now, because we've expanded our team. So pending sales were down, 7%, 7.5% from last year. But this is what I think is really important for people to take a look at. The average list to close price was 92%. So people are still getting about 10% below list price. Now, here's where I think this is really interesting. We look at Bastrop. Bastrop was down 4.4%, right? So this county is outside of Austin. Caldwell was down 4.9%. They had closed sales go up a little bit. But here, look at the city of Austin. This is why it's so important to look at the city of Austin different from the Austin MSA. And by the way, if you're looking at Redfin data, if you're looking at Zillow data, they don't have complete data. We are a non-disclosure state, so we are not allowed to disclose the sales price. Our MLS has the most accurate data and pulls the most accurate data. So I think that's something that people look at when they see Redfin data or go after the Zillow data and think that this is the God way of doing it. This is the best way. They know what they're talking about. Well, they don't. They don't. So the city of Austin is up 4.7%, but closed sales were actually down. So it means a lot of those higher price homes were closing in the Austin city. So Austin city is still selling higher compared to those suburbs around, and they had a 91.5% list to close price ratio. What do you think about these numbers? Are you going to jump into the market in 2025? Or are you going to wait? You tell me in the comment section. Let's roll back to the clip we were in. Austin's real estate market, fueled by tech boom and population growth, saw property values skyrocket in recent years. However, the Federal Reserve interest rate hikes aimed at curbing inflation, mortgage costs have escalated, dampening demand. I don't think it's actually dampened demand in the Austin area. Yes, overall sales are down, but this is one thing I would have loved to talk to CNBC about. 60% of the sales last year were under $500,000. Now, yes, $500,000 is not necessarily affordable, but it is more affordable than $1 million home to most people, right? So I think it's important to know that the people that are getting deals still in the Austin area are under $500,000. Where we're getting the most deals is in that luxury price point. I, for an example, put a home that was listed well over $5 million. We got a pretty significant price reduction when we finally got that house under contract. So the median close price was about $1.1 million, and it was about $100,000 less as the close price. So there is some significant movement in the luxury market. But even in this article, they go on and they interview somebody that talks about luxury, and they say the prices are going to continue to go up, right? Santinelli here says, making a 10% increase from the previous year. The luxury housing market has experienced notable growth, particularly in properties priced around $1 million and above. Texas recorded the sale of 12,888 homes priced at $1 million or more, making a 10% increase from the previous year. And that just has to do with prices going up. So prices aren't necessarily 50% down, but from the peak, they are definitely down 20%. I mean, here's a good example. Here's my MLS data, and we can see that 2023, we're in fact, the 2024 prices are still below the peak of 2023 in the 2024 market. If we go back and look at our other stats, I can show you that, yes, we are down 22%. A couple of things I want to note on here is that they talked to Nick Gorelli, right? The crash bro extraordinaire, who, by the way, everybody thinks I have a problem with Nick. The problem I have with Nick is he came onto my channel well before and started promoting his channel on my channel years ago, and then immediately found that you could get more views by talking about a crash and then selling a product to people. So he is actually selling a product to people. He sells your app. In fact, on here, it talks about his app. So I always don't really love it that people talk down about how realtors sell homes, yet he is selling people his app. So the irony in that, hey, don't listen to realtors, listen to me. I have an app to sell you. whatever. Austin's downturn is probably in the 6th or 7th inning. This is what Nicorelli said earlier. Values are down almost 20% from the peak, which I said, and inventory has spiked to the highest level in nearly a decade. I suspect there will be a modest correction over the next year with the market bottoming in late 2025. I actually agree. I think 2025 is the bottoming year, but you tell me. I think 2025 is going to be that year where if you're getting in, you're negotiating a really, really good deal and you're getting the price down and negotiating those rates down, which we're doing for our clients. Camera guy behind us. We're going to do a whole thing on the camera guy buying a house. So his name is Bryce. It's not camera guy. Okay. For the year ahead, we expect continued slowing and home prices to be to put some numbers to it. By the end of 2025, we expect somewhere to be between 1 and 1.5% year over year price appreciation. So they are still anticipating a price appreciation this year for the Austin area based on where we ended. So I think the headlines definitely make you shocked and make it look like things are scarier than they really are. I really do. For all those people that think I don't like Nick, I do think that he did a good job in talking about what's happening in the Austin market in here. I don't watch his content, so I'm curious if there's something different than what he said. But even Moody's Analytics is saying about 1.5% growth this year. So this is what I would have talked about Newsweek about. I'm curious what your thoughts about the Austin market are. Again, I come from a place of I was in your shoes when I moved to Austin and bought. And so I look at all of the things that go into play when buying a home. I look at the best place to be, where the future growth is going to be. And I look at that with every client. And that's what Eileen and everyone on my team does as well. So if you are curious and you want to work with us, my information is down below and you can find us through there. All right, we'll see you in the next video. Make sure you share this with a friend because sharing is caring and we care.